back to my YouTube channel. Now today's topic will be on the recent Bitcoin crash. If you are relatively new to Bitcoin, feel free to check out my previous videos in which I share more about what is Bitcoin. So the links to those videos are in the description section below. Now back to the main topic. So if you remember, Bitcoin reached an all-time high price of just above 64,000 US dollars in mid-April this year following Coinbase's listing. But across the past week, Bitcoin's price has dropped significantly. So it first started off with Elon Musk tweeting that Tesla would no longer be accepting Bitcoin as a form of payment for its vehicles because Bitcoin takes a lot of energy to mine and is not green. Then the price dropped a bit after that. But a few days later, the news came out that the Chinese government is banning its financial institutions from using cryptocurrencies in their transactions. And that led to a big price decline in which Bitcoin's price fell by more than 30% within a day, while some other altcoins, their prices declined by more than 40% within a day. So it had been a real bloodshed. Now the thing is, this Chinese government crackdown on cryptocurrencies thing is not new because in 2017 and 2019, we have heard similar news that the Chinese government is banning local and also foreign crypto exchanges in China. But this time the news hit pretty hard. So if you look at the all-time high price of just above 64,000 US dollars and you compare it to the low reached within the past few days, which is just about 30K level, it had been a decline of more than 50% from the all-time high. So the last time we had such a big dip was during the March 2020 pandemic, and prior to that was the 2017 crash in which Bitcoin's price dropped by more than 80% within a few months. Now this time the crash wasn't as terrible as in 2017, but it is still pretty bad because you have all these institutions and also more retail investors participating in the market for this round. So what are other investors doing? Now you have Elon Musk this time tweeting that Tesla has diamond hands, so implying that it will not be selling its Bitcoin holdings. Now, Tesla holds about 43,000 Bitcoins, in which it purchased at a volume-weighted average price of around 34K US dollars just earlier this year. Then you have ARK Invest's Cathie Wood. She remains optimistic about Bitcoin's long-term outlook, projecting that Bitcoin can reach a target price of 500K US dollars based on the projections and assumptions that institutional managers will be allocating 5% of their portfolios to Bitcoin. Now that seems pretty optimistic for me, but who knows, it may happen over the longer term. Then you have Michael Saylor of the MicroStrategy firm. So he said that his entities that he controls hold 111,000 Bitcoins and that they will not be selling. Then you have Mike Novogratz, another Bitcoin investor. He said that this time the crash is reminiscent of the 2017 crash, but he still remains optimistic about Bitcoin's long-term outlook. Then there is Justin Sun, which is the founder of Tron, a blockchain-based decentralized platform. He bought the dips, so he purchased 150 million US dollars worth of Bitcoins at an average price of around 36K to 37K US dollars during the recent Bitcoin crash. So as you can see from this, all these big investors, which are all high profile, they are still supportive of Bitcoin for the longer term, and they are not selling their holdings yet. So what about us retail investors? What should we do? Well, let's take a look at the Bitcoin price chart first. Okay, so taking a look at Bitcoin's 1-hour price chart, we see that Bitcoin has been rallying for a while across the past year to reach an all-time high of more than 64,000 here in mid-April. This is the peak. So you see, after this rally, this uptrend, we actually see that there is a head and shoulders pattern at the top of this uptrend. So this is the first shoulder. Then you have the head, whereby at the very top here is the peak, the all-time high. and then price dipped to test support again, rising up to form a peak which is lower than the previous high. And then it went to test support and then break below the neckline, which is this white line here. So generally when we see this kind of pattern forming at the top of an uptrend, we can predict that a reversal is coming, whereby the price will start trending downwards, especially once it breaks this neckline with large volume. Now at the top here, we call this the distribution phase, whereby the big players, the whales, they are distributing their Bitcoin holdings to those who are still chasing high at the very top. And once they dispose of their holdings, they manage to buy at the lows and sell at the highs. Then they dump their holdings, and then we have this significant dip over here, which is where we are right now at the bottom. So if you look at this bottom here, this is the accumulation phase, which is where bigger players may be starting to accumulate their Bitcoin holdings again, buying at the lows before driving another rally upwards in order to sell high again. So this is how they play the game: buy low, sell high at various points of the cycle. Now, in this accumulation phase, you see that there is a selling climax here, SC, whereby price hit the lowest at around 30K level, forming a support. And then there is the automatic rally, which happens quite fast after the selling climax. So here we have the resistance line forming, and this part over here is the trading range, which I expect that the price of Bitcoin will be trading within these two lines for a time period before another rally upwards again. So we see that during the past few days, it has been keeping tightly within its range, and I've also drawn a downward trend line here. So if you look at this shape, it is actually a descending triangle. See here? Now usually if price breaks below the descending triangle, we will expect it to form a lower low. So it is a possibility that if prices break below the support, then it will go lower and perhaps even break below this lowest support over here before actually starting to rally upwards again. So I'm interested to see the action around here, which may occur within the next few days. So it is very crucial to keep watch here. The prices are already being squeezed within this triangle. So if it manages to break out with high volume, then it is a sign that, okay, the downtrend is over. We will be starting another rally. However, if prices are being squeezed here and then they dip below this support with high volume and even dip below the lowest support reached within the past week, then expect to see it fall below the 30K level before rebounding again. And perhaps after that, it will be able to test resistance, move upwards, and then break out, and then we will have another rally again. So I'll be interested in watching the price action within the next 1 to 2 or 3 days over here, whether price dips below, and I'm expecting it might be able to dip below 30K if it does dip below, or it may be able to break out and form another rally. So yeah, well, if it does manage to break outwards, then you should look out for high volume, which is a sign that the big players are starting to accumulate Bitcoin again because they think that prices are low enough already. So this is what we will be keeping watch for. Now, when prices do break above the resistance of this trading range and it breaks out with high volume, you will be more certain that a rally is starting again. And so you might want to be buying the dips within this area before the rally starts again. So what price target can Bitcoin possibly achieve once the rally starts again? Well, a lot of analysts have been predicting that Bitcoin may be able to attain a price target of $100,000 by the end of this year. And this is roughly based on the stock to flow model, which shows the relationship between the supply of Bitcoin and its price over time. Now, this stock-to-flow model is also used to measure the value of other scarce commodities like gold and silver. If you look at the stock-to-flow chart shown here, you can see that over time, as the supply of Bitcoin reduces, the value of Bitcoin goes up. Well, this is because Bitcoin's supply is halved every 4 years, as miners get 50% less of Bitcoins for verifying Bitcoin transactions. And this will occur every 4 years until the last Bitcoin is mined in the year 2140. So whether Bitcoin can attain those price targets also depends on the external events that may occur and may be beyond our control, like what happened recently, China's ban on cryptocurrency. That is a black swan event which resulted in the Bitcoin's price crash. So regulatory risks, they are one big thing to consider, because we always hear about different countries' governments banning cryptocurrencies here and there, and if another country starts to ban cryptocurrency again, then that will also affect the price of Bitcoin. So this is one serious thing that crypto investors should take into consideration if you're investing in Bitcoin and other cryptocurrencies. Now, another thing to consider would be if and when the US Federal Reserve starts increasing interest rates again. That would also impact the price of Bitcoin, because when interest rates rise, then investors will shift their money from speculative and risky assets like Bitcoin and other altcoins into more stable and safer assets like fixed income securities. If you look at 2020 alone, Bitcoin's price rose by more than 300%. And if you were lucky enough, you bought Bitcoin during the March 2020 low of around $3,800 and you sold at the all-time high of just above $64,000, you would have made a gain of more than 1,500%. Now that is some big gains there. Okay, so well, you see Bitcoin, cryptocurrencies in general, they are really volatile. They can give you high returns, but then you can also have really big dips, like double-digit movements within a day is not uncommon for cryptocurrencies. So yeah, high risk, high return, traditional investing, right? Now, so if you look at the past 2020 year alone, a lot of institutions have been participating in investing in Bitcoin. So that is one positive thing to note, because institutional support is always good. It means that they believe that the long-term outlook of cryptocurrencies is positive. That is why they are investing in Bitcoin, to either hedge against inflation or to bet on the fact that Bitcoin will be more mainstream over the next few years and over the long term. So there are reasons supporting the Bitcoin purchases, and in fact, we saw some of the institutions stepping in to buy the dips during the recent market crash. So institutions are still supporting Bitcoin. So that's a good thing. Now, what should we retail investors do? So if you're still holding on to your positions, holding on for dear life, then you can continue to do so, because usually after the accumulation phase, there will be a next rally. So if you can wait until that, then maybe you can mitigate your losses. And in fact, if you can wait long enough, maybe you can even make gains again. So it really depends on your investment time frame. If you're not in need for emergency cash now, then continue holding on to your positions, wait for the rebound, wait for the next rally. If you have more cash, then you can even buy the dips and implement the dollar cost average strategy. This can also help you to make greater gains over the long term. Now, if you also are savvy at trading, then maybe you can short your positions before the next rally starts, okay? So there are various ways to go around this market crash that we are in right now. So I can't say which is best for you. You need to take into consideration your risk profile, your investment time frame. Yeah, be sure not to put too much of your money in cryptocurrencies because they are highly volatile. So generally, people would say you can put up to 10% of your portfolio in cryptocurrencies and the rest in lower risk assets. So it depends on you, what you think is best for you. You need to understand yourself, your investment time frame, and your need for liquidity. If you're a risk taker, then maybe you can take more risk, or perhaps you like to be a long-term investor. You just dollar cost average along the way. You can still reap great gains with that strategy. So I hope you have learned something from this video. Now, these are not financial advice, so these are just my analysis and my views. If you think they're helpful, then yeah, it would be great, right? We would all like to profit together ultimately. So thank you for watching my video today.